Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I'm going to go over a bunch of market data. This is our market conditions, and whenever the market conditions are ripe and changing, I like to see kind of what's going on. Are we in the power zone, the quote power zone of the investments that we're in? We want to be in undervalued investments. We want to be in those that have ripe market conditions for a change of that undervaluation to overvaluation over time. And this presentation is going to go over all that stuff. So let's jump in. I'm excited to go over this market update with everybody. And first, we're going to do stocks to commodities ratio because that's what tells us what's undervalued or overvalued. We can see a slight uptrend here, but we are in massively undervaluation for commodities. And I think commodities will outperform stocks. We're going to go into what I think is an inflation period, and we're about to start it any second. You can tell by inflation figures going up, but stocks do very well in a low interest rate environment or an environment that doesn't really have increasing interest rates. Under inflation environments, we have increasing rates. So commodities outperformed, commodities outperformed, commodities outperformed, commodities outperformed, and I think a commodities outperforms coming very soon in an inflationary environment. Here is what drives inflation, in my opinion. The green line's the average for the new privately owned housing unit starts. We're looking at the real estate cycle through housing starts. Wherever you have a large amount of construction of new homes, it's an inflationary period. This period here is the red period on this one here. So inflation here is this period here. This is the housing starts right here. This was the other inflationary period. Housing starts were here. So we went way up. And then we're coming into another inflationary period where you get more loans against more new homes being built through a fractional reserve lending system, which is inflationary. So this is some market data to show us that I think we're going into an inflationary period. And sometimes it takes a little bit of a run up for that inflation to really hit the system, which I think is happening right now in our system as the inflation is just starting to hit. Now here's the stocks to real estate ratio. I'm showing you the timeframes for a housing boom or an expansion phase of real estate. These are the inflation periods or the housing starts expansion phases. And as you can see, stocks underperformed real estate during these timeframes. So real estate outperformed stocks, real estate outperformed stocks. And we are coming up into this bubble zone of the S&P 500. And I think we're going to see a large revaluation where home prices are going to vastly outperform stocks, and this ratio is going to come back down. That's my opinion. Here's emerging versus developed markets. I just put two large trend lines in here. Downtrend break, downtrend break. I think that emerging markets is a great opportunity for investment. We are going to see a declining dollar in an inflationary environment. It's going to charge the emerging markets higher because of that decline in the dollar. We broke out in 2000 and we went sideways for a little bit for about a year or two, and then we ramped higher substantially. We broke out again. We've been going sideways for maybe 6 months or so. We may have a little bit more time down here, which I hope we have because I am buying the POOP out of emerging markets in my 401k. And I think we're going to eventually head higher here at some point soon. But inflation is going to have to become very apparent to the general public and to people who control money. That's going to spur the rotation of money, and emerging markets always do incredibly well in this type of environment. Now, the copper to gold ratio, this is a massive downtrend occurring. We have a big downtrend of the big from 1860. We have another downtrend here from 1970. These are big charts here. This is like a big deal. Now I'm gonna show you kind of a price projection of how ridiculous this can be. And what you do is you take it from the bottom to the top here. So it's about this. And the projection from here on the breakout puts us above this long-term downtrend line. Now, if we break through this, we could have another big run, because now that projection, if we break it, and this is how ridiculous it can be, then that projection could be something on the lines of, maybe we'll go to about here. I mean, we could put this on top of that. I mean, it could go all the way ridiculous levels, potentially, for the copper to gold ratio, with copper outperforming. Now, that's obviously going to take some time. I am positioning in copper because we're going to create this new world that consumes copious amounts of copper. You can also see in this corner here that we just broke out of this downtrend just recently, and it could pull back a little bit. Not too worried about that, but we have a long way to go higher with this ratio. And I think we are at a over century low here that we just broke out of its downtrend. So this is ridiculous. This is a 50-year downtrend break. And if we break this other one, that is from 1860. That's 160-year downtrend break potential in 4, 5, 6 years or something like that. So this is a very interesting setup. Here's the oil to gold ratio. I've got from 2008, you draw the trend line in, and we just broke that ratio to the upside. So oil is now outperforming gold. We've got a clear downtrend break, and we have the potential to go all the way back up to a 0.15, 0.125 ratio, probably a 0.125 with a high probability of hitting that, from a level that was absolutely ridiculously low, an anomaly in history. So I think oil is looking very good. It is another indication that we have a commodity bull market right in front of us. Now here's the real interest rate. What I have here in this red line with the arrow is the gold standard. And you could see deflation, inflation going all through here. You can obviously tell that they were cheating the standard in 1955 and on, as we only got inflation. And then people started saying, you're cheating the system, you're printing more money than you have gold. We can see it in your data. They started turning in their dollars for gold, and then they closed the gold standard window and said, nope, we're not going to give you any more gold. We're just going to go to this fiat toilet paper currency. And ever since then, we've had inflation. The red line's inflation, the M2's money supply, I believe. And then the difference is the real negative rate, which is the blue line. And we can see that we are in vastly deep negative rates. It went down quite substantially. Usually that is an indicator or closely marks the inverse relationship to gold. Gold and silver should be just barreling higher right now, but they aren't. And we could see a snap higher at any point. Here's the S&P 500 price to earnings ratio. Ever since about 2000, we've gone into ludicrous overvaluation mode. And I think this is going to come back down. I think interest rates are going to have to go higher because of inflation. And I think it's going to pop or prick this bubble in the S&P 500. So that's what I've got. Hopefully this gives you a little bit better outlook on some of the commodities and what they're doing on a long-term perspective. Those spots that I'm really interested in are obviously commodities, precious metals, emerging markets, anything that has a currency outside of the dollar. I don't think the dollar is going to necessarily crash and have some hyperinflation. I'm just saying that we're going to have inflation. It's going to be this kind of big inflationary period. It may last for 5 to 10 years, and then we'll see what happens after that, how the housing market's doing, what the imbalances are. But I think we're going to have inflation, weakness in the dollar, and commodities will do incredibly well because they are so undervalued in relationship to other assets. So everything market condition-wise is positive for holding commodities. There isn't a single metric that I can tell or see that is negative against commodities at the time, outside of maybe the 10-year yields going down. But they just recently reversed a little bit higher. I'll go over that in another clip. But everything looks good on a long-term perspective and looking at ratios and PE ratios, price to earnings ratios. Everything looks great. So hopefully you guys like this content. Give me a thumbs up if you like it a lot. And thanks for listening. This is Finding Value.